Good day, you're watching Businessworld Live. I'm Jes Delos Santos and here are today's top stories. Fitch Ratings warns that rising interest rates may put more pressure on small businesses and consumers whose finances have yet to recover from the pandemic-induced downturn. Heads up motorists, oil companies implement a rollback on diesel prices while gas prices have increased. The Customs Bureau exceeds its target collection for July by nearly 40%. And PLDT nets more than 13 billion pesos from the second round of its landmark tower sale. We begin our broadcast with Fitch Ratings cautioning against the impact of rising interest rates on small businesses. The credit rater says rising policy rates will put more pressure on MSMEs as well as consumers whose finances have yet to recover from the COVID-19 pandemic. As for banks, Fitch says rising rates will have a mildly favorable impact on their revenues. Fitch expects the policy rate to reach 4% by the end of next year. Recall that last month, the Bangko Sentral raised its benchmark interest rate by 75 basis points, bringing the policy rate to its current level of 3.25%. BSP Governor Felipe Medalla earlier said the Monetary Board could again hike rates by up to 50 basis points on August 18. The country's factory activity slowed to a 6-month low in July. While the PMI reading of 50.8 remained in expansion territory last month, S&P Global said the latest reading was also the weakest in 11 months, excluding the flat January factory output. S&P Global believes that global uncertainties and the ongoing impact of the pandemic continue to weigh on export demand. Despite the slowdown, it also said Philippine firms added more workers for a third month in a row in July. This helped companies clear existing backlogs at a faster pace. Now, heads up motorists, expect mixed movements on oil prices beginning today. Effective this morning, diesel prices are seeing a rollback of 60 centavos per liter, while kerosene prices have decreased 75 centavos per liter. Gasoline prices, however, are up 75 centavos per liter. It's not just in the Philippines. Manufacturing figures weakened the world over as inflation continues to hit hard, further fueling fears that economies are sliding into recession. But how immune is the country? Let's get insights from Paolo Rivera, economist from the Asian Institute of Management. Paolo, good morning. Okay, Paolo, I think, Paolo, if you can just turn on your camera for us. All right, good. Okay, now looking at your forecast first on inflation, or one of the few forecasting inflation to have cooled in July at 5.5%. That's below the median estimate of 6.2%. What's your basis here for the slowdown?
The basis of my 5.5% slowdown in inflation for July is the lower oil prices that we have experienced for the past few weeks. And some of the price rollback is quite significant, particularly for gasoline previously and in diesel. Also, the slowdown in other commodity prices could have contributed to the slowdown in inflation, as well as the improving supply chain constraints from the previous months.
Does that mean, Paolo, you're expecting inflation to continue to ease for the remainder of the year and that we have somehow already peaked maybe June?
Well, that would depend on the scenario, particularly in the international sector. If certain constraints would continue, like the war, or the supply constraints would again go heavier, then inflation might surge up again. No? But so far, given the information that we have as of the moment, inflation may slow down, okay? Because of the improvements that we have in the domestic economy as well as in the international economy.
But are you expecting as well more price pressures here from second round effects in the second half? I mean, we have, of course, the minimum wage hike. Should this not at least further push prices?
Well, there would be pressures, but this might be tempered by the policy stance of the Bangko Sentral ng Pilipinas, as well as other interventions by the national government to temper inflation.
Are you seeing elevated levels of inflation still to be supply driven, or are we seeing emergence as well of demand side risks here?
Well, for the succeeding months, it may be a combination of both demand pull and cost push because, as you know, number one, the holiday season is upcoming and demand will again surge up. No, that will put a pressure on inflation. Second, the continuing supply constraints. No, it may be tempering or it may continue depending on what's going to happen in the external factors. The dynamics between the supply side and demand side of inflation might persist in the succeeding months, particularly in the latter part of 2022.
Okay, is this going to be a concern now? Like what we reported earlier, there has been a slowdown in factory activity in July. This has demand softened. How much of a concern is this, and should we be expecting manufacturing to pick up, and when could that possibly happen as well?
Well, inflation will be a concern for the manufacturing sector, considering that if they are securing supply from the international market, and as you know, our exchange rate is in the phase of depreciation, and it would really require more peso to acquire imported products. So it would drive up inflation, which will be a concern, no, for them whether they're going to import more or transfer the burden on prices, which would again, no, it would trigger it's one factor that would trigger inflation.
But weak manufacturing figures not isolated here in the Philippines. It has been reported at least a number of economies here the world over. That again, like what we said earlier, further fuels of fears of recession. This, of course, further weakening demand for crude as well. Does this mean we should at least expect oil prices to sink further?
Well, oil prices would continue its trend, no? Because of the certain policies that we have against oil and the continuing demand for oil, especially now that the economy is more open. The demand for transportation is rising significantly, which would pressure the oil prices to go up given demand that we have now.
Question now, since we're talking about global recession here, how immune really is the Philippine economy? I mean, there have been some corners who previously have said that, more or less we are somehow immune against the weakening of global economies here.
Well, personally, I would not call it immune, but the Philippine economy, good thing, has a runway for policy interventions that would actually temper the negative effects of what's going on in the international sector to our domestic economy. The good thing is that the runway that we have, given the strong macroeconomic fundamentals that our policymakers have created for us, this runway actually gives us more time for planning, for adjustments, so that if ever any other negative impacts would occur to us, we could actually absorb it. The economy could actually absorb it and not really feel the full extent of these impacts.
Now, talking about that runway, I mean, BSP has been doing the heavy lifting so far here. They're in tightening mode. How much more do you see them at least hiking rates for the rest of the year and even all the way to 2023?
Well, should the pressure on inflation continue, we can expect the Bangko Sentral to continue the tightening in order to temper inflation as well as counter the strength of the dollar because of the activities of the Fed. It's actually our response to temper, to balance inflation, interest rate, and the movement in our exchange rate. Because any movements in these macroeconomic variables have actually creates losers and winners in our economy. And balancing it is the key to maintaining the trajectory of our economic growth for the succeeding year. Actually, from the end of 2022 and to 2023.
All right, thank you very much again for your insights. That was Paolo Rivera, economist over at the Asian Institute of Management. Thank you, Paolo.
Thank you.
Now let's pause for a quick break, but coming right up after that. The local bourse honors the contribution of the late former President Fidel V. Ramos to the country's financial markets. More of that and other stories when Businessworld Live returns. Stay with us. And you're still watching Business World Live here on One News. I'm Jes Delos Santos. President Ferdinand Marcos Jr. has signed a proclamation declaring a national period of mourning for the late former President Fidel V. Ramos until August 9. This means that starting yesterday, all Philippine flags must be at half-mast in all government offices. The Senate and the House of Representatives have also adopted separate resolutions to express their condolences in the passing of FVR. For its part, the Philippine Stock Exchange also mourns the death of former President Ramos. The PSE also hailed his role in the history of the local bourse since he was instrumental in the merger of the Manila and Makati stock exchanges. Ramos's former NEDA chief, Shelito Habito, also took the time to reminisce his moments with his former boss.
He was both firm and soft. That's the best way I can describe it. He was firm in his decision making.
The Budget Department has released 8 billion pesos worth of subsidies for rice farmers. This fund translates to a 5,000 peso subsidy to at least 1.5 million farmers affected by the rice tariffication law. The financial aid will be distributed by the Department of Agriculture in the third and fourth quarters. The Customs Bureau has collected over 84 billion pesos in July, surpassing its monthly target by 39%. The collection includes additional revenues from the Tax Expenditure Fund and the Post-Clearance Audit Group. In the 7 months to July, the BOC collected more than 481 billion pesos, surpassing its 388 billion peso target by 24%. This was also 34% higher than its collection in the same period last year. Customs Commissioner Yogi Ruiz attributed the strong performance to improved valuation and digitalization of the Bureau. He also noted that import volumes have gone up as the economy gradually reopened. Union Bank has completed its acquisition of Citi's consumer banking business in the Philippines. Over 1,500 Citi talents, including its senior management team, is joining UBP. Union Bank has also set up a dedicated integration team to work closely with Citi to ensure a smooth transition. Union Bank is the 7th largest publicly listed bank in the Philippines. With the Citi consumer portfolio, UBP will become part of the top 3 credit card issuers in terms of usage and spends. Now, PLDT has completed the second closing of a transaction involving at least 5,900 telco towers for 77 billion pesos. The telco giant received 13.2 billion pesos from the sale of more than 1,000 towers. So far, the group has completed the sale of 4,000 telco towers, representing 68% of the towers portfolio subject to the sale. Now, how does China keep its factories running under their zero COVID policy? Well, some of the country's biggest companies are operating in a so-called closed-loop system. Bloomberg's Alan Wan explains how it works in this report.
China is forcing some of its biggest companies to operate a closed-loop system. In fact, it's become the new normal for a lot of factories here. So, how does it work? The point is to keep workers inside the factory complex, away from the outside world. This means they eat, sleep, and even exercise at their workplace for days or weeks, sometimes months, without outside contact. So this system first started to be used by manufacturers in Shenzhen, those that had worker dormitories within the compounds or nearby. So these companies could actually shuttle their workers back and forth without actually leaving the campus. It's not just factories. Offices have had to make arrangements for staff to live and work inside. So China has been using this method to contain its COVID outbreaks for a while now, including the Beijing Olympics in February. That's me at the Olympics. For weeks I was totally fenced in at my hotel, and they put me on a bus every time I needed to go to a competition. I could only see the rest of the world through the windows. So why are companies doing this? It's basically to keep production going while conforming to Xi Jinping's COVID-0 strategy. It keeps China's giant manufacturing sector and the economy humming along, even as persistent cases threaten lockdowns for the rest of the population. And to be honest, it's working for some companies. For example, Tesla, it saw its shipments surge in June after it started operating its closed loop. This comes after its output was severely dented during the initial stages of the Shanghai lockdown. But these closed loops aren't devoid of problems. Some workers have staged walkouts or even protests. Like in this video shared on social media, where workers appear to clash with guards and revolted against lockdown measures. More generally, workers are just sick and tired of being locked into some factory or dorm for weeks or months on end and being isolated from their families.
And those are the biggest stories in the economic and corporate front today. I'm Jes Delos Santos. We are One News, all sides, all the time. Don't go away. We'll give you the latest on the local bourse when Businessworld Live returns. Stay with us. All right, let's have a quick check of market movement, especially this time starting off with Asia, with stocks across the region starting the day in the red. You have Japanese stocks here on the downside here, the Topics and the Nikkei all down by more than 8%. The same also for Korean stocks here, down by 0.4%. And Aussie stocks also starting the day with a 0.3% decline. This, of course, as fears of a global recession worsen amidst lower manufacturing figures. The Philippines, however, also keeping track of those losses, albeit starting the day on a flattish note here on the downside, however, at 6,305, down by 0.1%. This, of course, comes ahead of inflation data release expected on Friday, with economies expecting levels to remain elevated at 6.2%. But another catalyst that investors, of course, are looking into second quarter earnings just this morning. Another lender released their second quarter figures. Metro Bank, in fact, posting quite strong numbers here for the April to June period, with net income increasing by 95% to 7.6 billion pesos. Revenues likewise increasing by double digits, up 12% to 27.4 billion pesos. Net interest income likewise also up by 11% to 20.5 billion pesos. This pushed their first half net income to 15.6 billion pesos. That's a growth of 33%. Provision for loan losses likewise slashed by 46% in the January to June period to 3.8 billion pesos. This as non-performing loan ratio continues to dwindle for the lender. As you can see right here, Metro Bank, however, joining the rest of the local bourse, starting the day in the red, down by 0.6%. That's 0.2% to 47 pesos and 50 centavos a piece. Now, looking at the rest of our players here in the main index, let's try to see how some of individual stocks are performing here. It's really looking like a mixed bag here. As you can see, Converge, best performer so far, up by 3.9%. URC likewise gaining more than 3%. Ayala and Globe, as well as Megaworld and GT Capital, all gaining more than 8%. On the flip side, however, Metro Pacific down 2.4%. San Miguel likewise also in the red, 1.6%. This after news that its power unit, SMC Global Power Holdings, says that losses of its two power plants may have hit as much as 15 billion pesos. Also interesting to take a look at SM Prime right here. Also lower by 0.8%. That's after first half revenue hit 20.6 billion pesos, a 96% jump for the mall operator here. Also, SM Investments in the red, down by over 8%. This amid reports, of course, that we have just this morning that they have secured approval from the SEC on the merger of SM and All First Equity Holdings. All First, of course, is the parent company of Philippine Geothermal Production Company, which carries on the general business of development and utilization of minerals, oils, and geothermal and other similar products. Again, SM Investments starting the day down by 8%. And then lastly, let's have a quick check here at Petron. That's after the oil player saw net income almost doubled to 7.7 billion pesos in the first half. This as sales continued growth momentum here. Sales for the first 6 months up by 35% to 51.4 million barrels. This as restrictions eased and travel resumed. As you can see here, Petron enjoying some gains here, up by 2.1%, now at 2 pesos and 93 centavos a piece. And that's it for today, August 2nd, 2022. Join us again tomorrow at exactly 9:30 a.m. You can also catch us on Signal Play. Register for a free account now at www.signalplay.com and stream One News live anytime, anywhere. I'm Jes Delos Santos. Mask on, wash hands, and stay safe. Philippines, we are One News. All sides, all the time.